Hello, Brian Klotz, also known as BK. In this short segment, we're going to look at bank statement loans. We get a lot of questions on bank statement loans. Why would I do a bank statement loan? Who are they really for on it? Well, for the most part, when we're looking at our standard traditional mortgages, Fannie Mae and Freddie Mac, they're going to require 2 years of self-employment. They're also going to require 2 years of tax returns on it. And for those tax returns to have been filed with the IRS on it. So who does a bank statement loan normally fall into play on? For the most part, it's ones that are recently self-employed. Maybe I moved from a software company that I was an employee and I had a lot of contacts and I set up my own business on this. I've only been doing it for a year and I'm making twice as much money as I made over there. Well, we can't count that on the traditional mortgage on it because we don't have 2 years of true self-employment on it where a bank statement loan may fit. There's also others here, their accountant does a very good job of getting tax deductions for them, and what's shown on the tax returns are not really a fair representation of what they're actually making. So how does a bank statement loan work? Bank statement loans are going to look at, and we've got different programs everywhere. We can do these as 24 months of business bank statements. We can do them as 12 months of business bank statements. We can do them as 6 months. The more documentation you're able to provide, the better that it does for your rate on it. But what we're looking at on a bank statement loan are gross deposits. So if you have $20,000 a month coming into your business on average, every single month on it, right off the bat, for almost every single bank statement loan out there, we can use $10,000 a month there. Now, if it's a service-based business, meaning you're not carrying inventory or anything else like that, we can generally get that number up to 80% to 85% of what your gross deposits are to use as a calculation. So instead of $10,000 a month, we're getting closer to $16,000 or $17,000 a month that we're using for your gross income. It's going to depend, and it's going to have to make sense on the business. And ultimately, your CPA or a CPA can review your documentation on there and say, you know what, he really doesn't have any overhead on this. The expenses are, only 7% of his gross income or whatever it may be. Then we can use those numbers as well. So there's a lot of flexibility that comes into play when using a bank statement loan. And if you've ever had problems with your tax returns of making those numbers work here for getting a mortgage on that, I want to know there are programs out there. Give me a call. I'd love to speak with you about it. Thank you.